Wow, lots of statistics there, and I've got to say, and quoting a gentleman who emailed me a week or two ago, there are far too many statistics to worry about when you're buying a house. He said, if you find something you like, you should sit down and contemplate how long you might be living there and enjoying the property, and then make the decision just to get on with it. So we'll pass on all that detail. It's always interesting to know how the market's performing, but boy, I think if you like something, you just get on and buy it. Now, joining me on the show at the moment, Mark Potter. Mark, how are you doing?
Good, thanks. Thanks very much for having me on.
Good to see you again. Mark is an Associate Director with Baker Young Stockbrokers. And I guess, Mark, perhaps to get things underway, can we have a little bit of a rundown on how the share market's performing at the moment and perhaps how it's been going over the year?
Sure, Tim. The share market at the moment is, I suppose we began the year with the Australian share market sort of gradually moving forward through January, February, March and into April. And then we had a 50 basis point rate cut from the Reserve Bank. It actually sort of spelled pretty much the top of the market for this calendar year. We'd had quite a nice recovery up until then from late last year. And some of the European concerns have resurfaced, and we've seen, a reasonable sell-off during the course of May.
Okay.
Stay away in May is often the saying. But,
is that right? Okay.
Hopefully, maybe get back on the horse later in the year. Anyway.
Okay. Just touching on the interest rate drop. I mean, we as real estate agents, I won't say we're praying for it, but we certainly were keen for it to happen. Obviously, from your point of view, the opposite's the case.
Well, no, look, the rate cut is actually, really good for investors generally, good for the share market, good for borrowers, obviously. Yep. Promotes investment and is an expansionary sort of move from the Reserve Bank, and probably the fact that they cut rates by 50 basis points was a bit of a sign that they were trying to play catch up with where the real economy was.
Okay.
And because of course we went through the earlier part of the year without any cuts, and waited till last month to actually sort of give us another one after the cuts of late last year.
Right. Okay.
So, I mean, next week we'll see. I think it's an even money bet that at the moment, whether the Reserve will actually cut further into going into June. If they don't in June, I'm sure they will in July.
Okay.
Yeah.
Well, I mean, that's an interesting point because we're 6 days away from that meeting again, and I guess the papers will be full of speculation over the next few days, and we'll see where that ends up. Talking a little earlier, and I was reading in Daily a few moments before we started the show, and there was a note about BHP having put off their expansion of Olympic Dam for a little while. What are your thoughts, and what's been happening in that space over the last little while with BHP?
Well, I think if the share market's a bit of a guide, and normally the share market sort of predicts the future reasonably well, I mean, resource share prices have probably been, in the top end of the market, have been the worst performing stocks over the last 6 months or so in the market, as I suppose the market looks forward and says, well, things are looking a bit tougher out there, a bit gloomier and doomier. Maybe China's slowing down a little bit. Yep. Maybe some of the projects where additional supply has been put on is sort of catching up with demand. There's been some pressure on commodity prices, and of course, I think we'd all do the same thing. If you're at the helm of one of those big companies and you've got a number of expansion options in front of you, yep, you're going to continue to review and monitor those before you make the decision about investing the big bucks. Yeah. I mean, you've already invested, as far as Olympic Dam's concerned, obviously there's already been a lot of time and money invested in looking at the potential of that expansion. But there's plenty of things on BHP's table where the dollars can go. Yes. And the next few years in the world economy might be a bit slow, and they could easily make the decision to defer some of the investment up there. Yeah. Okay. Well, and presumably, just as a quick broad brush, their investments are not just here in Australia, are they? Correct. I mean, they made a major acquisition of a shale gas asset in the US called Petrohawk last year. And there's some committed spending to that project. Obviously, well, in Australia, in the Pilbara, the iron ore is probably number one. Yep. For them, but they've got some potash assets and some copper assets as well. where big dollars are due to be spent in coming years.
So no doubt it's a little bit of shuffle the funds into the places they're needed immediately, and perhaps put a slowdown on some of the others.
Correct. I mean, I think that there's every chance that gets looked at the moment, and you know, institutional investors as well are sitting on the sidelines and saying, hey, you know, like you're producing some terrific cash flows. We'd actually like to see a little bit more of that in our pocket, maybe. You know, if things are going to be slower, rather than you know, ramping up the capex right at the moment to the tune that you know currently got booked in.
Okay. So outside of that, internationally, politically, nationally, politically, what's affecting the share market the most, and what are your main concerns at present?
So Greece is the word.
Yeah, yeah, very good.
But that's you know, that's quickly moving to you know, I suppose concerns about the whole of Europe, and that's probably, you know, that is certainly the market's #1 concern at the moment.
Yes.
The government indebtedness through Europe is an ongoing issue. A lot of people are describing it as a bit of a slow train wreck over there.
Yep.
And you know, that's still got a way to play out. Overnight, we've seen the Spain has tried to bail out its its largest bank with around about 19 billion euros by issuing the Spanish government bonds, and then them being to send them to the ECB, and the ECB lend them back money, and the ECB says, no, we're not having any of that, which I think is probably fair enough.
Yes. Yeah.
And you know, so you know, there's some big debts in those countries that you know, investors across the globe could be wearing some big losses if there's further write-downs.
Yeah. And how about nationally? How are people feeling about where we sit at the moment?
Well, Australia, you know, I suppose, you know, the lucky country, we continue to be in that, you know, in that spotlight at the moment. And in Australia, we're very well placed compared to the rest of the world. You know, similar to perhaps, say, Canada, for example. And you know, so we're, I think in Australia that things are definitely tougher there out in the real economy, outside of the mining industry. We saw this morning, we saw some retail sales data come through which suggested that in April retail spend was actually down by 0.2%. Doesn't sound like a lot, but they were expecting it to. Normally retail sales, you know, always trend up.
Yep.
They were expecting it to be up by 0.2%, and you know, so things are tougher there generally than they have been. All
right. Well, we need to move on, so we might go back to some of this discussion in a few moments' time, if that's all right with you.
Yeah, sure.
For the time being, we're going to go and have a look at some of the properties that have sold in our Going, Gone segment.